Hello, trading is closed on September 30th, 2020. Let's go over our calls. First, we have some disclaimers. This is my predictions for tomorrow, October 1st. Trade at your own risk. Here's my email address. We had some targets, both higher and lower. We said it was a negative pattern. Unless we gapped up smartly, we expected to see lower targets. We did gap up smartly, and we got the higher one. Higher one was 33.57.93. We cross it off the list. We finally cross off the last nearby ultimate higher target from September 18, 33.61.42. The optional target, 33.28.02. It's one of the 5% of the time it didn't print, so we'll just forget that one, cross that off the list. But we still have 33.27.53, which should print at some point. Look for the pattern with the early low. This is it. Tomorrow also has the early low. This is normally a strong pattern, rallies into a last hour high. There's no requirement this high be higher than the earlier highs, but if it isn't, and if we maintain its peak under the high of day when we open tomorrow, should lead to more weakness. Typically this closes at the day's high or close to it. When that doesn't happen, it's trouble. Remember, tomorrow's open can substitute for today's close. We also gapped up, hit all these other highs, not only closed under all the highs, we closed under the intervening lows. It's a negative pattern. It can still be invalidated tomorrow if we move up smartly, but if that doesn't happen, I'm looking for lower prices. You are rallying all day long. We had this big rally. MEJT said it was false. We'd undercut this low. We did. And then it simply went too far, too fast. We pulled back, and we did that too. Now, there's nothing in the system that says you have to go short right here, but certainly it cautions you against taking a long, or at least taking a long without a stop. And so even if you don't make any money, at least you can avoid losing. This purple line is a TDST line. Goes way back to February. It's a relevant resistance level, and we stopped right there. We also need to go one bar past this to overcome resistance from this white TDST line. So when you got two of them like this, you're in an area of strong resistance. Here's what we said yesterday. Let's we gap up smartly. We had lower targets, but we weren't confident enough. The rally leg was over. The odds are pretty good it's over now, though. Here's our long-term chart. We'll take a look at wave blue C. It's not the only way to count it, but if that's A and that's B, you've got nice fib relationships between the A and the C, and A of C and B of C. You've also got a clear 5 waves up, 1, 2, 3, 4, 5, and you look at the fifth wave, 1, 2, 3, 4, 5. Doesn't mean it's the right count. Can't tell till it's too late. But if we get an impulsive move down from here, and it sure looks like one started, which wasn't the case of this last candidate, could be an impulsive move similar to wave red A. At least you now have a strong Elliott argument that that's plausible. Can't count 5 waves down here yet, but that could morph into something else by tomorrow. Well, tomorrow's pattern has early low. Doesn't mean you won't gap up. Today's weak low to high pattern should be followed by more weakness, lest we gap and overtake the high of the day early. It's also negative. We gapped up, hit higher highs, closed under all of them. Unless we have a gap and overtake today's high early, I look for lower prices tomorrow. And the wave count is there to justify a strong impulsive move lower if that's what happens. Again, it doesn't mean it's the only count, but it certainly is a valid count. And if we do get an impulsive move down from here, certainly can explain it. And 33.27.53 should be the first stop on the way down with other targets well into the 3200s. And that is today's call.